Hey everybody, welcome back to the Financial Freedom Show. My name is Rob Berger. In today's short video, it's all about I-bonds. With the recent release of the latest inflation numbers, we now can make a pretty solid prediction of what the new I-bond rates will be beginning in May. So here's what we're going to do. I'm going to walk through what that new rate will be. I'm going to talk about some buying strategies if you haven't purchased I-bonds this year yet. And then I'm going to talk about, I almost want to say it's a sneaky way to actually buy more I-bonds in a year than you might think you can. So that's what we're going to do. Let's jump right in. So remember how I-bonds work. There's what they call a composite rate. That's the interest rate you earn, but it's made up of two things. One is a fixed rate. Once you buy your I-bond, whatever the fixed rate is, it stays the same for the full 30-year term of the bond. That is currently at 0%, which probably doesn't sound all that exciting. It's actually the inflation rate that's exciting. We'll get to that in a minute. But as it turns out, the fixed rate at 0% actually isn't all that bad. You can think of the fixed rate on an I-bond as sort of the real yield. That is the after inflation rate of return. Keeping in mind, we've still got that inflation rate we'll get to in just a second. So the fixed rate is at 0%. It's been there since before COVID. And I think most people think that in May it's going to stay at 0%, and I would agree with that assessment based on what we're seeing. The last time that it was set above 0% was towards the end of 2019 in November, and it wasn't much above 0%. I think it was 0.2 at that time. But at that point in time, the real yield, the yield on tips, was actually above zero. Let me show you. This is the 10-year constant maturity on inflation-protected securities. And if we dive into like November of 2019, we can see it wasn't much above zero, but it was around 14, 15, 20 basis points above zero. Now, today, it's negative. Now, as you can tell, there's been a huge jump in the last month. It went from under a minus 1%. It's jumped all the way up, but it's still at a negative 0.12. So it's still negative. So I think that the fixed rate is, unless something dramatic happens between now and the end of the month, it's going to stay at 0%. So the exciting part, though, is the inflation rate. So it's going to jump. So on an annualized basis, when it was set at the end of last year, on an annualized basis, the inflation rate was 7.12%. And at that time, I published an article. I'll link to it below. I've updated it. As great as that rate was, I was predicting, and it's really probably silly to predict inflation and interest, but that didn't stop me, that it would actually go higher in the next round, and it turns out that it has. So based on CPI numbers that were just released, the new rate, the inflation rate, 9.62% on an annualized basis, that's just really insane for about as safe an investment as you can make. So that's what the inflation rate will go to, even if we assume the fixed rate stays at zero. By the way, unlike the real yield on a TIPS, the fixed rate on an I-bond cannot go below zero. So even if it stays where it is, which I think it will, we're looking at 9.62% annualized for the next 6 months beginning in May. Now that raises the question about buying strategies. So one really important thing to keep in mind is that although the Treasury announces any changes in the fixed rate and the inflation rate twice a year, the next one again will be in May, when those rates apply to a bond depends on when you buy the bond. So for example, if you buy I-bonds now in April, you will get the current rate, the current composite rate, which is 7.12% for the next 6 months. And then following that, you'll get whatever the composite rate is. We think it's going to be 9.62% that they announce in May. So the 6-month period follows the month in which you purchase the I-bond, and that gives us some strategies. So in my case, my wife and I have already purchased our I-bonds for 2022. But if you haven't, if I were in that situation and hadn't bought them yet, I would absolutely be buying this month in April. That locks in the 7.12% for the next 6 months beginning in April. And then I get whatever the composite rate is that's announced in May. We think 9.62% for the 6 months following that. Now, if I were going to make a prediction for what the inflation rate would do when it's set a second time this year in November, I would actually predict that the composite will be lower, again, ignoring the fixed rate for a moment, but focus on the inflation rate, will actually be lower. I actually would predict that inflation is going to moderate between now and November. And yes, when November comes and I'm completely wrong about that, please feel free to leave a comment to this video saying, Rob, boy, you blew that one. I'm not making any investment decisions based on that prediction. I'm just saying I think that is a likely outcome 6 months from now, but I guess time will tell. Still, my strategy wouldn't change. I would buy, if I hadn't purchased already, I'd invest the I bonds now in April, lock in the 7.12% for 6 months, and then after that, enjoy the 9.62%, at which point you will have held the bond for a full year. If you want to cash out then because you don't like how the rates change at the end of 2022, you certainly can. Just remember, if you cash out before 5 years, you do lose 3 months worth of interest. But still, given where the I bond rates are now compared to, say, a savings account or a certificate of deposit, even losing 3 months worth of interest would make them well worth it. Now, the last thing I want to mention are buying limits. So as you probably know, you can purchase $10,000 per Social Security number. So for my wife and I, we each have bought $10,000 in I bonds this year. So that's the first thing. Now, if you do get a tax refund, you can invest $5,000 from the tax refund. That comes in the form of a paper I bond, although you can convert that to effectively an electronic bond via treasurydirect.gov. But here's the thing that a lot of folks don't realize. You can also buy I bonds for a trust or for a company. So if you own an LLC, for example, in the name of that company, you can invest $10,000 in an I bond, which is something I'll be doing this month for my company. So there you go. That's I bonds, without question, the best risk-adjusted investment available today. It's just crazy. Almost 10% annualized for the next 6 months. Add in a 7.12% if you buy in April for about as riskless investment as you'll find anywhere. So there you go. If you have any questions, leave them in the comments below. I'll help you out any way I can. And until next time, remember, the best thing money can buy right now is I bonds. But, long term, it's financial freedom.